Hello traders, Day Trader Matt here, a businesswithtrading.com, doing a trading strategy recap for Monday the 15th of June. And today was a fairly interesting day. Price did gap down quite extensively, and then it just pretty much went sideways for a little over an hour, and then finally started to move higher in a choppy fashion. And that's pretty much what happened in the morning. A little bit boring, but today we made 3 trades. We were 2 for 1 and pulled 5.25 points out of the market. So pretty good day all in all. Our first trade was right up here. We ended up getting long right here and ended up getting out down here. So little stop out there. Price then chopped around, started moving higher. We did get long here, which we did take profit in up here, and then we ended up getting long again over here, of which we held and got out up in this region here. So pretty good day all in all. 5.25 points, always a good time. We can add this to our running total, and that's what makes the markets so fun. We don't make money every single day, and I don't claim to make money every single day because it's impossible. People who tell you they're making money every day are lying. That's just what the market is. If you trade every day and you trade for more than just one day, most likely you're going to lose money. Just because you always have what people call beginner's luck. Which luck isn't really... I don't believe in luck. I think we make our own luck. But anyway, that's a topic for another day. Getting in, there is a chance that you can jump in the market and you can make money. You never lose any. But you only trade for a day. Which means a couple hours. And you only make one trade. Yeah, that's possible. But if you trade over a long period of time, those losses are going to come. And what separates professional traders from amateurs or wannabe traders, or whatever category you want to make, but an amateur versus a professional is that professionals mitigate their losses. Amateurs don't care. They just want to make money. So they're okay taking a large loss because they're going to try to make money, and that's all that really matters. I had some conversations this weekend, and that's what we were talking about. I got an email from a guy, and he said, you really did well. You called the top by a penny in this options trade. That was very good of you. It was very accurate. I thought about it, and I was like, that actually was a pretty good trade. But I don't get excited about my wins because I'm always thinking about what's around the corner. Because trading is something that just constantly evolves. And you constantly have to process your risk in the market. Because there's always going to be some changes. And because of that, I don't think I can get too excited over the successful trades because unsuccessful trades are going to be right around the corner. So I wanted to talk about that a little bit. This is what we did in the room, 5.25 points. Let's talk about a trade that we actually did in our futures group. Was coffee. And I didn't realize it was going to be this quick of a trade, but it just happened to be that. And we ended up getting long at this green line right here. Price came down. Price came up, chopped around, came up, and we ended up getting out over here. Over here, price comes up, and that's when, I told everyone we're going to take our first profit, 129.70, and then we're going to move our stop 10 cents above entry. And then sure enough, this was around like 9.49 or something. And then price chopped around, and around 10.05, 10.03, 10.05, something like that. It came up, it hit our target, and then it came down and it hit our second target. And this trade was interesting because it was not over 2 to 1. This trade, this first one, we made, that's supposed to be a period, 70 cents. 129 to 129.70 equals 70 cents. And then 129 to 129.10 equals 10 cents, which gives us a total of 80 cents on that trade. Well, we were actually risking down here 50 cents. Okay, so that gives us about a 1.6 to 1 reward to risk. And we talk about all the time, you want to have over a 2 to 1, over 3 to 1. And our last few trades have given us 5 to 1, 6 to 1. So the trades that turn into money turn out to be phenomenal trades. But sometimes you have your trades that they start to kind of look like they might not work out. And that's when you have to mitigate your risk. And that's what kind of differs me from other people. I'm not all the time like I'm going to put my entry here and I'm going to see what the market does, and it's either going to stop me out or it's going to run all the way to my target. Because I've been trading for a long time and I don't like to give money back. And if I'm in the money, I don't like to go out of the money. But I want to know, what is price likely doing? Has price kind of given up? Is it not giving up? Should I still allow it to have that stop that I have because it's playing out? Those are all good questions, and they're questions that can be answered by the methodology that we use. The methodology that we use isn't some cookie cutter, pattern trading. A lot of people jump onto the pattern trading bandwagon. It's so popular right now. But that doesn't help you. Like, oh, here's an outside bar. Let me get long. Let me jump in this inside bar. That doesn't help you. And that's not price action. It's not. It's pattern trading. And people that tell you it's price action are full of shit. Excuse my language, but it is what it is. The way I look at things, it kind of teaches you to read the market. What is actually playing out? What is likely to play out? And what's my probability? What am I looking at? So this trade, once we got in, as it started bouncing around, I started to really look at that and say, it is starting to look like crap. It's not really giving us what I was looking for. And that's when it's time to say, okay, let's throw in the towel. And that means let's set our stop to an area where we're comfortable. We're not going to lose anything. If price does do something, we'll let it happen. But if not, we're happy just getting out. And we were able to pull it 1.6 to 1. Like I said, our last few trades have been 5 to 1, 6 to 1. So we can afford a 1.6 to 1. It's when all of your trades start becoming less than a 2 to 1 that there is a real issue. So I wanted to point that out, talk about it, just because a lot of our trades do happen to be very, very high success winners. It's good to point out something that isn't quite as successful, but it's still success. We still made 80 cents in coffee. A win is a win is a win, but sometimes a win is not exactly a win, and that's why I wanted to explain this a little bit in more detail. Okay, so we did get into a trade today in our options group, and I wanted to talk about it a little bit. We jumped into the IWM, and we got in right here on this red candle. We got in at this green line, approximately at this green line because it was an options trade. But this is about the time and the level that we did jump in. we are up in the trade so far, and I'm thinking that price ends up much higher tomorrow. So that's really what we're looking at. So, wanted to highlight those trades. I haven't really talked about option trades that much lately, but we're still in it, still going strong, and having a ton of fun. So hopefully the video made sense to you. You got something out of it. Feel free to add to the conversation below. If you have any questions, you can also ask that below. No such thing as a dumb question, only the one not asked. If you don't want to ask here, I have an email, I have a phone, Twitter, Facebook. You can reach me on any of those platforms, and I'd be happy to answer. So with that, thanks for watching. Have a great rest of your day, and I'll see you back here in the markets. Thank you.